Consumer inflation slowed to a four-year low of 3.9% in February on a year-on-year basis. The annualised figure was 4.4% in January. Now, a lower petrol price in February and slower increases in food inflation were the main reasons behind the deceleration.
Inflation has been on a downward trajectory since reaching the high of 6.4% in August last year. The main driver of the latest drop in inflation was the sharp fall in global oil prices, which has pushed fuel inflation lower. Citigroup economist Gina Skuman says inflation could have fallen even lower had it not been for high annual increases in medical aid tariffs in February.
Fortunately, we had that petrol price decrease in February, so that was quite a nice windfall in the consumer pocket, and we all enjoyed that. But unfortunately, there's always an offset, and what was driving up prices during the month was medical aid contributions. Once a year, every February, Stats SA will survey how much medical aid contributions have gone up for the year. And in South Africa's case, for this year, it was 7.5%. So that was quite a big driver of CPI during the month of February.
Economists say the February reading is likely to be the lowest point, as inflation is expected to start trending higher again from this month. The upward pressure will come from the weaker rand, rising oil prices and higher food prices as a result of a poor maize crop. All this means the next move in interest rates is almost certainly going to be an upward adjustment.
By the end of the year, however, the currency we're currently facing will have pushed CPI above 6%. And that means for the rest of 2016, seems like a long way off, but that's where the Reserve Bank looks, because it takes 12 months for interest rates to take effect. And for 2016 right now, we've got inflation rising to just below 7%. That's why I say, if the Fed in the US had to hike rates tonight, the Reserve Bank would have to follow very quickly.
So, with fuel prices expected to rise by almost 2 rand at the beginning of next month, consumers are certainly in for some price pressures in the coming months. But analysts say aggressive rate hikes are not in the cards for fear of choking an already struggling South African economy. SABC News, Johannesburg.